Assalamualaikum warahmatullahi taala wabarakatuh. So, my name is Muhammad Afiq Masalim. Today, me and my group will share to you about topic audit of cash balance under chapter 23. So, first of all, cash is the only account that include in every cycle except inventory and warehousing cycle. So, audit of cash balance is important because of its susceptibility to theft, and also the cash can be significantly misstated as illustrated in the case of the Parmalat. So first, I will share the relationship between cash in the bank to the various type of transaction cycle. Here, we can see the relationship of the various transaction cycle to the general cash account that can be focal point. So as we can see, we can get the cash in bank account in capital acquisition and repayment cycle, sales and collection cycle, acquisition and payment cycle, and also payroll and personal cycle. So why is the general cash account is considered significant in almost all audit, even when the ending balance is immaterial? This is because the amount of cash flowing into and out of the cash account is often larger than for any other account in the financial statement. Furthermore, the susceptibility of cash embezzlement is greater than for other type of asset because most of the asset must be converted to cash first to make the asset become usable. So in the audit of cash, auditor must distinguish between verifying the client reconciliation of the balance on the bank statement to the balance in the general ledger and verifying whether recorded cash in the general ledger is correctly reflect all cash transactions that took place during the year. It is relatively easy to verify client reconciliation of the balance in the bank account to the general ledger, but a significant part of the total audit of company involve verifying whether cash transactions are correctly recorded. For example, each of the following misstatement ultimately result in the improper payment of or the failure of to receive cash. However, there is some of the mistake will normally not be discovered as part of the audit of the bank reconciliation. So first, the failure to bill a customer and embezzlement of cash received from customer. So these two type of misstatement can be found when auditor is doing an audit of sales and collection cycle. Next, the duplicate payment, improper payment of personal expenses, and payment for raw material not received. So this type of misstatement can be found when the auditor is audit the acquisition and payment cycle. Payment to employee for hour not work. So auditor will not find this type of misstatement when audit the bank reconciliation because they will find in the audit of the payroll and personal payment cycle. Lastly, the payment to excessive interest to related party. This type of misstatement can be found in audit of capital acquisition and repayment cycle. So, some of the misstatement can be found when the auditor is doing a audit of bank reconciliation. So this is the misstatement which are normally discovered as part of the test of bank reconciliation. Firstly, failure to include a check on the outstanding checklist. This is referred to the check that are uncleared check, the check that has not cleared even though it has been recorded in the cash disbursement journal. Secondly, the cash received by the client recorded in the wrong period. So, the check received subsequent to the balance sheet date but recorded in current date. This is because check is taking around 3 to 5 days before it can be clear. This might happen when the check is being received at the balance sheet date, for example, like on December, but it was being recorded on the date check is being cleared, which is on the January. So there will be some wrong recorded on the period. So the next one is deposit recorded near year ended. So deposit in the bank in the same month and include in the bank reconciliation as a deposit in transit. This might happen when the client is deposit the money using the gyro transfer. So there will be floating period on the money transfer. For interbank deposit, it will take shorter time when using gyro rather than transfer between different banks that will take around 3 to 5 working days before the money can be transferred. Lastly, payment are not payable debited directly to the bank balance, but not entered in the client record. This is happen when the company are using standing direction when deposit their money to specific time that they want, which mean that um, they deposit the money today, but they using standing direction to the bank, asking for the bank to deposit the money to the customer, maybe on next day or next week. So the date will be different. So I will pass the presentation to our next presenter. So thank you.
Um, Hello everyone. So I'm Nishan. Next, I'll be presenting about Learning Objective 2. So what is Learning Objective 2? As we know, Learning Objective 2 is to identify the major types of cash account maintained by a business entity. So basically, we know that there are 5 types of cash account. So the first one will be general cash account, impress payroll account, branch bank account, impress petty cash fund, and cash equivalents. So what is general cash account? So general cash account is the focal point of a cash for most organization because virtually all cash receipts and disbursements flow through this account. So the next one will be impress payroll account. An impress account is a cash account for a business realized to pay for small routine expenses. Funds contained in impress are regularly replenished in order to maintain a fixed balance. The next one would be branch bank account. So for a company operating in multiple locations, it is often desirable to have a separate bank balance at each location. Branch bank accounts are useful for building banking relations in local communities and permitting the centralization of operations at the branch level. The next one is Impress Petty Cash Fund. So, an Impress Petty Cash Fund is not a bank account, but is sufficiently similar to a cash in bank to merit incursion. A petty cash account is often something as simple as a preset amount of cash set aside in a cash box for incidental expenses. The next one would be cash equivalents. So, company often invest excess cash accumulated during certain part of an operating cycle that will be needed in the reasonably near future in short term. So highly liquid cash equivalents, this may include time deposits, certificates of deposits, and money market fund. So next, I'll show you a simple graph of relationship of general cash to other accounts. So as we know, general cash is in the middle, followed by branch bank account, cash equivalents, impress payroll account, and impress petty cash fund. So that's all from me. Thank you. I'll pass to the next presenter.
Assalamualaikum warahmatullahi taala wabarakatuh. My name is Muhammad Takif Beramli and I will continue my part, which is objective 3. So objective 3 is design and perform audit test of the general cash account. There are 3 phases in design test of balance for cash in bank. So for phase 1, which is identify client business risk affecting cash in the bank, set tolerable statement and assess inherent risk for cash in the bank and assess control risk. So the first one is identify client business risks that affect cash in the bank. Risk may arise from inappropriate cash management policies or handling of funds held in trust for other. Client business more likely to arise from cash equivalents, so that's why auditor need to understand the risk from client policies and strategy, as well as management control that mitigate this risk. The second one is set tolerable misstatement and assess inherent risk for cash in bank. So cash balance is not material, but cash transaction affecting balance are almost always extremely material, which increase a chance for material mistake amount of cash exists. Cash is more susceptible to theft, so there is high inherent risk for existence, completeness, and accuracy objective. Next is the access control risk. So there are two categories, which is control over transaction cycles affecting the recording of cash receipt and disbursement. So example that we can see is in the acquisition and payment cycle that has significant related with the cash transaction, such as adequate segregation of duty between a check sign-in and check payable function. So if control effective cash-related transactions are operating effectively, control risk is reduced as the audit test for the year and bank reconciliation. Secondly is an independent bank reconciliation. Monthly bank reconciliation is done on general bank account on timely basis by someone independent of the handling or recording of cash receipt and disbursement as essential control. It is to ensure that accounting record reflect the same cash balance as the actual amount of cash in the bank after considering reconciliation items. So the control is enhanced when a qualified employee reviews the monthly bank reconciliation soon after its completion. So that's all from me. I will pass to the next presenter.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Ashraf and I will presenting about first identify client business risk affecting cash in the bank. So the first one, the risk may arise from inappropriate cash management policies or handling of funds held in trust for others. So they're more likely to arise from cash equivalents. Second method is set tolerable misstatement and assess inherent risk for cash in the bank. The cash balance is not material, but cash transactions affecting balance are most always extremely material. So the cash is more susceptible to theft. So there is high inherent risk for existence, completeness, and accuracy of it. For the access control risk, there are two categories. First, control over transaction cycles affecting the recording of cash receipts and disbursement. So for this control, if control affecting cash related transaction are operating effectively, control risk is reduced as the audit test for the year-end bank reconciliation. So the second one is independent bank reconciliations. They are done monthly on a general bank account on a timely basis by someone independent of the handling or recording of cash receipts and disbursement as essential control. So it ensures the accounting records reflect the same cash balance as the actual amount of cash in the bank after considering reconciliation items. The control is enhanced when a qualified employee reviews the monthly bank reconciliation soon after its completion. So the next methodology for designing tests of balance for cash in the bank. Phase 2, design and perform tests of controls and substantive tests of transaction for several cycles. For this method, in phase 3, for this methodology for designing tests of balance for cash in the bank, phase 3, first, design and perform analytical procedures for cash in the bank. Second, design tests of details of cash in the bank to satisfy balance related audit objectives. The audit objectives is related audit objective. So it has audit procedures, sample size, item to select, and timing.
Assalamualaikum. My name is Muhammad Hasif Najmi. So I'm gonna continue learning objective 4, which is recognize when to extend audit test of the general cash account to test further for material fraud. So it have two steps, which is step 1 and step 2. The step 1 is test of controls. Test of controls form the part of audit procedure to be performed to address the risk of material misstatement and is one of the important objectives as determined by the auditors while doing an audit of receivable and revenues. Tests of control are included in the further audit procedure, which are performed after assessing the risk of material misstatement. Second, next slide is error or fraud. When statements of the company are misstated without any intention, then it is known as error. When the misstatement is intentional, then it is known as fraud. Next slide is fraud risk. Fraud risk is defined either as management fraud or misstatement giving emerging from asset misappropriation. Fraud risk factors identified by performing various analytical procedure and discussion with personnel from management. So step 2 is for the step 2, the auditor needs to perform audit tests of general cash account, which are follows: verify the closing balance of the cash account with physical cash. Next, the inflows and outflow of cash are verified with their payment or receipt voucher. Next, the entry in the cash account is done by the authorized person of the organization. Next, authorization should be required before making payment of big amount. Last but not least, the general cash balance shows the cash in transit. So the next slide is prepare proof of cash. When the client has a significant internal control vulnerability in cash, auditor will occasionally create a proof of cash. The auditor examines a proof of cash to see if the following were carried out. Each and every recorded cash receipt was deposited. Next, all deposits in the bank were documented in the accounting records. Next, the bank covered every cash disbursement that was reported. Lastly, there was documentation of every penny the bank disbursed. Next slide is interim proof of cash. This is as you can see, this figure 23.7. A timeline for interbank transfer is shown in figure 23.7 with 4 transactions occurring just before and after the balance sheet date. The interbank transfer schedule has to be inspected for a number of reasons. Each transfer's payout reception date must be recorded on the same day of the fiscal year. The dates in figure 23.7, date recorded in book columns 4 and 7 are accurate since they fall within the same time frame for each transfer. It can be an effort to make up for a financial deficiency if a cash receipt was reported in the current fiscal year and a disbursement in the following fiscal year. The year-end bank reconciliation should be accurately include or remove payment list on the interbank transfer schedule as unpaid check. The 12th 3111 bank reconciliation for the general cash account in figure 237 should only contain the second and third transfer outstanding check, not the other two. The dates in column 4 and 5 should be compared. The bank reconciliation understatement of the number of outstanding checks suggests that cheating may be possible. So the last slide is the interbank transfer schedule. The year-end bank reconciliation should accurately include or omit receipt list on the interbank transfer schedule as deposit in transit. The savings and payroll account 12/31/11 bank reconciliation in figure 2037 should show a deposit in transit for the third transfer but not for the other three. The bank reconciliation shows overstated deposit in transit, which suggests cheating. Despite the fact that interbank transfers are typically the subject of audit tests for fraud, these tests are frequently carried out on audits when there are multiple bank transfers regardless of internal controls. Inaccurate transfer processing can lead to misclassification between cash and account receivable, in addition to the potential for cheating. Many auditors feel that the test should always be run due to the materiality of transfer and the relative simplicity of executing them. So that's all for me. I will pass to the next presenter.
Hi, I am Abdul Hakim and I will be presenting about the learning objective 5, which is design and perform audit tests of the Impress payroll bank account. To cover payroll check as they are issued, cash is placed into Impress payroll account if needed. If the employee cash out all of the check, the account will be reduced to zero. Funds are withdrawn from the Impress account rather than from the company's mail account, because payroll checks normally will clear within a short period of time. The Impress account provides extra control by restricting access to general company cash account and facilitating bank account reconciliation. If there is an Impress payroll account and an independent bank account reconciliation, such as that stated for general account, the payroll bank reconciliation test should take only a few minutes. Outstanding checks are usually the only item that needs to be reconciled. For the most audit, the great majority of these clear shortly after the check are issued. Next, the required document for testing the payroll bank account are bank reconciliation, bank confirmation, and a cut-off bank statement. Reconciliation procedure is performed in the same manner as is described for general cash, except that test of the outstanding check is normally limited to a reasonableness test. Extended procedures are necessary if the controls are inadequate or if the bank account does not reconcile with the general ledger Impress cash balance. Now, I'll be presenting about learning objective 6, design and perform audit tests of Impress petty cash. Petty cash is a small amount of money that a company typically keeps available to cover the minor expenses of their day-to-day operations. A petty cash fund is usually placed in a drawer or a box. Companies often use petty cash for small office supplies such as postage, flowers, cab fares, and other small purchases, as well as to reimburse someone for bringing in some things like lunch or coffee. When a company pays for these expenses, a petty cash receipt or voucher is usually filled out with information on each transaction so that it can be recorded to the company's accounting system and included in its financial statement. Petty cash is a unique account because it is often immaterial in amount, yet it is verified on many audits. There are several internal controls for petty cash. First is the use of an imprest fund that is the responsibility of one individual, meaning that only one individual is responsible on the imprest fund. There should be segregation of duties in disbursing and approving the petty cash funds. It is impossible that one person who approves petty cash is not the petty cash custodian to avoid overlapping duties. Second, do not mingle petty cash fund with other receipts, and the fund should be kept separate from all activities such as sales cash, personal funds, and other collected revenue. Next, there should be limits on the amounts of any expenditure from any petty cash funds, and types of expenditure that can be made from petty cash transactions should be well defined by the company policy. When a disbursement is made from petty cash, adequate internal controls require a responsible official approval on a pre-numbered petty cash form. The total of the actual cash and checks in the funds plus the total reimbursed petty cash funds that represent expenditures should equal to the amount of petty cash fund stated in the generator. When the petty cash balance runs low, a check payable to the petty cash custodian should be written on the general cash account for the reimbursement of petty cash. The check should be for the exact amount of the pre-numbered vouchers that are submitted as evidence of actual expenditures. These vouchers should be verified by the accountant payable clerks and cancelled to prevent their reuse. Moving on to the test of petty cash. When control risk is assessed as low as few reimbursement payments occur during the year, it is common for auditors not to test petty cash for the reason of immaturity. The most common procedures auditors can do to test the petty cash are: first, account the petty cash balance, and secondly, carry out detailed tests of one or two reimbursement transactions to determine that they are properly supported. So that's all from our group. Thank you.